Hello guys, this is Oba FX Trading Academy. Welcome once again to my YouTube channel, and today we're going to be looking at the Deriv Synthetic Index Volatility 25 Index. As you all know, this channel is dedicated mainly to top-down analysis of financial assets, whether crypto, forex currency pair, or Deriv Synthetic Indices. So today we're going to be looking at Volatility 25 Index for those of us that trade the Deriv Synthetic Indices. So without wasting much time, let's go into it. As we all know, I like starting my analysis from the monthly time frame. I do my top-down analysis using pure price action trading strategy. So let's look at the monthly time frame and see what information we can extract. So basically, looking at the general overview of this asset, we can see that the asset started out by making a lower low, a lower high, lower low, lower high, made a lower low, and is currently moving upwards. So in other words, we can say that the general picture of this market is that it's in a downtrend. However, if we were to look at the latest lower high that gave birth to this lower low, it would be safe to say that the most recent activity in the market for the past months has been buyers trying to push the market upwards. So the thing is whether the market will end up taking out this lower high from the monthly time frame and the market will now generally be in an uptrend or not is something that were yet to know. So having gotten this from the higher time frame, our major area of concentration, however, would be on what is happening here. And on this part of the chart, we can see that the market, however, has been making what a series of higher highs and higher lows. So the market made a high, ranged for a long time, and then made another high. So for us to see what really happened within all these ranges, all we need to do will be to go to the weekly time frame. Now, from the weekly time frame, we can now see that the highs and the lows look much clearer. How do I mean? Now we can see that the market made a high, made a lower high, higher high, made a double bottom, and then went into a range and thus on this part of it. So the market ranged for a while and then finally made a new high. So if I'm to start looking at most recent activity, I can therefore say that the market made a higher high, a higher low, a higher high, made a higher low, and somehow if we are to go to the line chart, you can see that there's a higher high here and the market is currently retracing downwards. However, with very, very large momentous bearish candle. So, like I said before, I do my top-down analysis using three major tools, which are the trend line, support and resistance, as well as Fibonacci Retracement Tool. Now, because this is the low that gave birth to this most recent high, I can now come here and draw my Fib tool from here upwards. Okay. So the logic is that the 50%, the zone between the 50% and the 61.8% mark of the Fibonacci retracement tool is what I usually refer to as my Fibonacci retracement golden zone. That's because oftentimes it acts as a strong resistance or support zone to price retracing in a trending market. So having gotten a clearer picture of the market direction based on the most recent activity of price from the weekly time frame, let's look at what we can extract from the daily time frame. Now, on the daily time frame, we can see now that the picture looks much more clearer. We can see that we have our highs, low, high, and the market is currently retracing downwards. Also, another thing I can add would be this zone, which could be what? A strong support zone. So the question would now be, having seen this picture, what would be my take on this particular index? So if you ask me, remember, like I always say, trading is a game of probability. So all we try to do is paint a picture that helps us to make decision that increases our probability of making money from the market. So if I'm to place my trend line correctly, we can see that the trend line has just been broken. So I would say the market is currently trying to target this zone. Now, the reason I'm saying this is if we take this as a high, to be what? A higher low. This is our most recent high where price is currently retracing from. So until the price takes out this low, we can't definitely say that it is now a downtrend. So if the market should get to this zone, all we now need to do would be to go to the much lower time frame. So if the market comes into the zone, all we need to do is to go to the lower time frame and look at what the market is doing here to see if we can get trading opportunities, which in that case would be what? Buying opportunities. However, another scenario could be markets coming here because as you can see, the momentum is very, very high. We have large bearish candles. So the market might finally get here, breeze through the zone, make a retest, and then our next target will be the Fibonacci retracement zone, where we can also expect that price could reverse back upwards. So, but for recency bias sake, what should we be doing? First, I wouldn't advise anybody to be taking any trading decision here. Why? Because the market is not at a key zone that would increase our chances of making profit. So, like I said, once the price gets into the zone, all we need to do will be to go to the H1 time frame because we drew our confluence from the daily time frame. So now you can see the market is still heading towards the zone. It's making lower lows and lower highs. So if I minimize this, once price gets into the zone, we'll look out for two things. First, we'll include a counter trend line. If the trend line is broken upwards and retested, then we'll take our buy trade. Can look out for chart patterns such as double bottom or an inverse head and shoulder pattern, which are both bullish reversal patterns. Or you can also look out for bullish reversal candlestick patterns such as bullish engulfing or the morning star pattern. So either of these that would help our bias to or help inform us that the market is about to reverse and continue in its original bullish direction, then we can take our buy trade with our stop loss being underneath this low. But if in another case we get here, we see that the candle, the market breezes past this low, makes a retest, then we can look for bearish continuation chart patterns or bearish candlestick patterns for us to take our trade. So I wouldn't want to stretch this video further. For those of us that trade Deriv synthetic indices, this is my take on what the market would likely do and my explanation and analysis on what it is doing currently. So if you're into trading these assets, you can compare this with your own analysis and monitor the market closely for buying opportunities. And if you're coming across this channel for the first time, like I said, what we do mainly here is top-down analysis of different financial assets. You can check the channel for other analysis that I've done in the past, and if you feel they make sense to you, you can subscribe for subsequent videos. And most importantly, if you're starting out your trading journey or you've been on this journey and you want to make your output better, you can always reach out to us via the contact details I have on my YouTube bio. Thanks again for stopping by this channel, and thanks to all that have been supporting this channel consistently, and have a wonderful day. Cheers.